Welcome to Three Towers Investing Channel, where you can get the latest in finance, investment, and innovation. Are you one of the guys who's having challenges saving your first $100,000? Well, don't worry, because you're not alone. Getting your first $100,000 is kinda challenging, but you'll be amazed at how easy to grow that amount once you have it. So watch this video till the end and we'll discuss the ways how to keep your money growing after hitting that $100,000 mark. But first, it'll be great if you can click that like button, subscribe, and hit that notification bell. The well-known billionaire, investor, and vice chairman of Berkshire Hathaway, Charlie Munger, believes that the first $100,000 is the most difficult to obtain. This is a common belief among affluent individuals. Once you achieve $100,000, the subsequent one often happens considerably sooner. You'll have $200,000, $300,000, and $400,000 in your bank account before you realize it. For those of us who believe that our income is expanding more slowly than we would want, this is great news. However, why is it becoming simpler? Let's examine why it takes so long to earn $100,000 and what you can do to hasten the process and achieve financial security years sooner. Most individuals find it challenging to begin investing. Investing is commonly ignored since it seems to be of low priority. Before you know it, you'll be bouncing back and forth trying to figure out how you're going to retire. Once they have some extra cash, they will start investing. It's like saying, you would light a fire as soon as it produced heat. Risk is another argument for why individuals avoid investing. Taking the initial step is the most difficult since the end line appears so far. It's all too simple to put things off until later. You need to put in the effort to reach the first $100,000. Thus, the majority of your funds must be given and earned by you. When your portfolio reaches a certain amount, compound interest starts to work its magic. Even though the percentage returns may not necessarily improve, the dollar returns grow significantly. For example, if a $5,000 investment gets a 10% return in 1 year, the difference is only $500 and is barely apparent. Working a couple of extra hours every now and then may easily get you $500. When seen in this light, it may appear small. If an investment of $100,000 yields a 10% return, the outcome is $10,000. This is a great place to start when it comes to replenishing your wages. A 10% annual return equates to $100,000 when your money reaches $1 million. That is far more than many people make at their jobs, and seeing such a quick gain is excellent. When a portfolio reaches $100,000, many say they can truly see how their investments are doing. As the snowball starts to roll, its rate of expansion quickens. The development is quite fulfilling when your portfolio reaches a sizable size, and the enthusiasm could speed up the process. Because the incentives are so great, you'll start looking for ways to speed up the growth of your portfolio. To increase your income and increase the amount you invest in these assets, you need to look for ways to do it. To speed up expansion, you may also look for strategies to increase profits. Knowing how effective compound interest is could make you rethink your spending decisions, since you'll see how that $100 will grow and continue to pay off for you if you invest it. Spending $100 at a restaurant means that money is permanently lost. If you put that money into investment, you may make $10 the first year, $11 the second year, and $12 the third year. Although $100 is hardly much money, it is the habit of saving that count. If you have $100,000 saved up, there are many things you can do that others on a restricted budget cannot. When you have the resources to take the risk of switching to a job that offers a potentially higher compensation or more opportunities for promotion but with inconsistent pay, your work could earn $50,000 a year. But if an opportunity arises, it would probably earn $100,000 or more a year on a commission-only basis. Taking this kind of risk is not an option if you require that $50,000 a year. Maybe you've wanted to start a company your entire life but have never had the resources to do it. Even if your new company makes you millions of dollars, if you can't launch it, it's a lost opportunity. The possibility of purchasing a home for less than market value may present itself in real estate. This will involve a big risk, but if you have money saved up, it could be worth it. Although selling off your assets isn't always a good idea, you do have the option if you need to, or if a once-in-a-lifetime real estate opportunity arises. Individuals who have less money saved are significantly more limited in their alternatives, which adds to the impression that they can benefit from more opportunities. When you have extra money and it won't put you in debt, it's easy to be more speculative if you think a stock has potential. You should still have backup plans in case the investment doesn't pan out. If someone you know offers you the chance to invest in a new business venture, you won't go bankrupt if it doesn't work out, is what I'm trying to convey. A person with low savings might not be able to partake in any similar. There are a few things you may do to hasten the process, even if you're still attempting to achieve the $100,000 threshold. You should concentrate on saving more money because the majority of this cash will be money you donated. The best strategy to accelerating the process will be this one. Increase your salary if you want to regularly save more money. This may be accomplished by taking a second job on the weekends or a few nights a week with the extra money being put straight into savings. Think about it. Wouldn't it be better to save that $100 for a special occasion rather than spending it on a $100 lunch out? Remember that counting pennies is just a stopgap measure until you reach your goal and may start to unwind a bit. Avoid making large auto payments on cars that are completely unneeded, as these expenses are the main causes of people never making $100,000. Once you are familiar with the saving and investing process, it will be easier to just keep doing what you are already doing. When you earn a sizable salary, you'll be used to looking for ways to increase your income and increase your savings. You'll also get used to making more deliberate purchases, carefully weighing whether you really need them or if saving the money would be a better investment. You'll also feel more at ease taking risk when investing through various market cycles, and you might even learn how to fully benefit from them. As Charlie Munger advised, take a break after you have $100,000. Your next goal is $1 million, but it will be simpler to reach because the majority of your assets are probably the result of compound interest. I hope you learned something from our video today. And if you do, it would be kind of you if you can share this video with others and inspire them. Who knows, it might change their lives too. Thank you for watching. To get more life-changing videos like this, don't forget to subscribe and click the notification bell. We are 3 Towers Investing Channel.